I think like right now is unambiguously the most interesting time to be in the blockchain space as an investor in a role like ours, but also to invest in consumer, because I think there are going to be some really amazing consumer applications built over the next 5-10 years.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Sam, thank you so much for joining me today. Super excited to chat with you. All right, Sam, you are an investment partner at CMT Digital, which is a digital asset fund that's focused on early stage venture investments. You guys manage roughly 500 million AUM, and CMT Digital is actually a subsidiary of the CMT Group, which is I think you told me it's a 28-year veteran of traditional markets. You guys do both, traditional investments and trading. So very, very impressive there. But Sam, I was going through your LinkedIn and it looked like CMT was your first job. So was CMT your first job straight out of college?
I actually spent 3 months at a bank and then quickly jumped over to CMT. I like telling this story just because I feel like I got so lucky in my career early on with the opportunity to come aboard CMT Digital. Maybe before I dive in, I should say, all these views are my own. They don't necessarily represent the views of CMT Digital or CMT Asset Management. And also, I'm excited to be on here with you. This is a long time friendship and a lot of work together over the years, and it's been awesome to see what you've been able to do with your platform, which is huge. And you get some amazing guests on here, and that's all credit to you. So
thank you.
Super excited to be on. So I graduated school in 2017. Went to work at a small bank here in Chicago. And I got the opportunity to work at CMT in September of 2017, got an offer. I knew that if I ever got the chance to work in the blockchain and digital asset space, I would jump at it. And this is kind of like a dream scenario where I would go into CMT. I wouldn't actually be working directly on the blockchain and digital asset side of things. When I came on, but I would have the opportunity to, potentially take some ownership in, our initiatives there, and otherwise in a kind of unique role where I joined to help on the operational side. CMT is a 28-year trading firm, as you had mentioned in the intro, and so there's a lot of kind of like clearing and settlement and trade reconciliation type work that needs to be done, and then also joined to help put some structure around all of the deal flow that came in through the founders of CMT, my partners on the CMT Digital Investment Committee, Scott and Jan. Is 20, 30 plus year networks in capital markets. So, stuff from real estate, private equity to venture capital. How can I quickly synthesize those opportunities and present them in a digestible way? This stuff is coming kind of from all angles. I actually sat across from the individual who led all of our investing activity in the blockchain and digital asset space in the early days, and I started to ingest the deal flow that she was sending to me, and that turned into a kind of organically the role of the first analyst on our blockchain and digital assets funds. And so, I moonlighted for a couple of years as an analyst in the blockchain and digital asset space, and then came on, full time, maybe in late 2018, early 2019, and have never looked back. At CMT, we've raised 4 funds, currently raising our 4th fund, and have invested in some really incredible, I think, world-changing ideas. And this is where I want to spend the rest of my career. I think there's a lot of runway left for development and true disruption to so many industries that I just feel uniquely fortunate to be in this role, and uniquely fortunate to wake up and come into the office every day and work in what I think is an industry that will radically transform our world.
That's amazing. Okay, so did you learn about crypto and blockchain before CMT? Because you joined CMT in 17. I'd say 17 was kind of a period where a lot of folks I know were not only like hyper aware of what was going on, but also like entering the ecosystem. But did you have an inkling or an interest in crypto and blockchain before that, before 17?
Yeah, so I read the Bitcoin white paper in like winter of 2015, maybe January of 2016. And I was really interested. I bought Bitcoin later in 2016. And, I don't think it was till 2017 that I actually read the Ethereum white paper. But when I read about smart contracts, and really, it was probably a few times that I had to read about smart contracts. I really understood that, or I guess imagined robust businesses being built on top of decentralized rails. And so that to me was the light bulb moment. I think Bitcoin for me was still, I was a college kid. I didn't have a ton of money. It wasn't, it wasn't to me like a very strong thesis, more than kind of a novelty that I wanted to play around with. But once I read about smart contracts, that's when I realized that we could really do things like reinvent our financial system and many other industries. And the trend for me was undeniably clear that the world is becoming more digital, less physical, and not the other way around. And so this technology fit perfectly into that trend. And so to the extent that I said earlier, like I figured if I ever had an opportunity to work in this industry, I knew I was young and could probably pivot outside and still have some runway in other places. But as a place that I wanted to take a risk early on, it was definitely the blockchain and digital assets space. And I just couldn't have found a better spot than CMT Digital.
What would you say that, or if there's any, that CMT's kind of investment philosophy or focus is? Because here at Fermion, we lean NFTs and consumer use cases. So that's kind of our core. We do some things outside of that, but that's kind of our core. Does CMT have a direct focus?
Yeah. So we're early stage is probably the best way to summarize it. So we're sector agnostic. I've heard it said before that being in categories before they're named. That's kind of what we try to do. And we think that presents edge with it. If it's an underappreciated, unnamed category, then there probably aren't a lot of people looking at it, and that will be reflected in things like pricing and competition. And so I think it's difficult to pin exactly where the space is going, but if we do a good job of being early to the new categories that are created, I think we're going to generate solid returns for our LPs, and I think to the point you made about Fermion's focus on consumer, I think that's exactly where the puck is going. I think the consumer-facing apps, the ones that own the users, are the ones that are going to accrue outsized value in the overall stack. I think there's value to be attributed to other layers of the stack, but I think at this point in time, with the regulatory clarity that we have in the United States, or are going to have, I think, quite soon, with just where the technology is at from a scalability standpoint, the societal recognition that at least Bitcoin is valuable, novel, disruptive, and the openness that I think global, society has towards building in this space, which is, manifested in really talented founders that may have had exits in other verticals building in the blockchain space. I think like right now is unambiguously the most interesting time to be in the blockchain space as an investor in a role like ours, but also to invest in consumer, because I think there are going to be some really amazing consumer applications built over the next 5-10 years.
So you basically think the inverse of fat protocol thesis. You're like, that's kind of over. The new era is, fat app thesis, or whatever you call that. And to add on to that, are you thinking that the infrastructure, like, do you think we have enough infrastructure?
I think that infrastructure is like an evergreen investment category. I think there are a lot of analogies in the software revolutions and hardware revolutions of the past that would, tell us that infrastructure is evergreen and always evolving. And so I think we'll continue to invest in there. I don't think we'll, ever really stop. But I think as far as, the, asymmetry of opportunities, I think that those lie on the consumer, facing kind of product side of things today.
If you could, this is kind of I'm spitballing here, but if you could control the flows of venture dollars going to startups within Web3, is an ideal allocation in today's environment like 20% infra, 80% kind of more application specific stuff, or is that kind of a little too far on the application side?
I don't think directionally it's incorrect. I think applications, things that add value to the end consumer's life in a tangible way for somebody that, might not really care about decentralization, but wants access to US dollars, or, wants a secure way to store wealth, or wants to own their, internet footprint, all of which I think can be enabled by blockchains. I think that does a really good job of showing the tangible benefits of this technology and proving out, I guess why this should be a category that's heavily invested into. So I think not only am I most excited about this, but I think it will spur kind of the next generation of investment into our space.
You talked about being involved in a category before it's named. Are you talking like crypto AI or DePIN or NFTs or stuff like that? Are you talking these different sectors, or what do you mean by a category, being involved in a category before it's named?
Well, those are named categories. But yeah, I love DePIN. I think DePIN's super interesting. I am loving the progress on Helium, whether it's data offloaded by the network, hotspot deployment as of late, Helium mobile subscriptions. I should caveat that we're an investor in Nova Labs and HMT. But that's as a flag bearer for, broadly the DePIN space, with many others, either in market or coming to market. I think it's an incredibly exciting category and something that can truly only be accomplished with crypto economic incentives, talking about mass deployments of hardware in dense urban areas to solve a problem that MNOs, mobile network operators, have been struggling to solve in terms of quality of service, for a long time. So I think these projects are wildly interesting, and it's a category that I would be excited to invest into the future. Categories before they're named, I think you know it when you see it. It's like, wow, I've never heard of something that is doing X, and I think the tendency is to shy away from investing in, or at least looking and taking seriously these types of opportunities. I think it's a trained muscle that you need to really focus on, to say, because this is something new, it is worthwhile spending time on, at least a little bit of time and understanding, as opposed to, I haven't seen something like this before, therefore it will never work. And ultimately, that's kind of like what I consider my job to be.
So not to reveal too much alpha here, but are there any inklings or bubblings up of some to be named categories that you're excited about? Like, one, for example, this is a named category, but crypto robotics. I'm really excited about that subcategory, just because if you look at the robotics revolution that is hopefully coming, what a lot of these companies are lacking is the physical data, like the data pertaining to the real world where these robotics will operate. And you can use crypto incentives to scale up, let's say, a network of mini robots or cheap RC cars, for example, to go collect physical data, which you can then give to these companies or researchers to make their robots more advanced. So I'm like, oh, that makes total sense. Really exciting. I'd say crypto robotics is kind of, it's very, very early days of a category, but do you have any kind of early to be named or barely named categories that you're excited about?
Yeah, I can give an example of a company, and I don't know that we've necessarily named the category yet, but we have a company in our portfolio called Daisy. The founder, Ray Lee, was previously at Parapop, and he has created a network, and actually a mobile app, iOS and Android, that influencers with that are over a certain threshold of followers can join, and they can get algorithmically rewarded for engaging with different social media algorithms to boost the reach of certain content. And the the payouts happen very shortly in stable coins. So that's a big problem in the creator space, long payout cycles. The ultimate end goal is to provide unique attribution. So every creator that has, different follower counts on X social media platform, or has a different demographic of followers, will have tailored rewards based on the specific piece of content and the specific reach of that personality, and so the thought is that can be solved through crypto mechanisms as well, zk-TLS pipelines, and so. This is, I don't know exactly what to call this one, which I guess is kind of in line with, not knowing the name of the category. But it's I think it's an underserved demographic in the blockchain and digital asset space, and a real pain point that's solved by crypto. And so we're super excited about that company.
All right. When you're diligencing a startup, how do you weight team versus market versus product? I think that, maybe there's another category I'm not mentioning, but, I think there's an age-old conversation around these three factors, specifically, like, I guess more heavily on the team versus market dynamic, but how do you view that?
Yeah. I think for the stages that we invest at, which is like, basically pre-seed to Series A, but sweet spot is seed, we're really underwriting the founding team. I think the founding team is everything. We're really trying to identify outlier founders that exhibit very high founder market fit. So it's an extremely difficult exercise. I think that's why there's a wide dispersion in the performance of venture funds, and there's and broadly why there's still opportunity in venture, because at least the early stages, what you're really underwriting is a founder, and then team. So is number one, then TAM, traction, technology, legal and regulatory as well. But it all comes back to team. I think Scott and Jan, who are co-founders of CMT Digital, have a long-time track record of evaluating different business opportunities and founders. And so they're kind of our secret weapon when it comes to the EQ analysis, I'll call it. And ultimately that proves time and time again to be the most important thing.
And when you guys are making an investment, do you guys have equity and token investments, or just token, or just equity, or how do you lean?
Yeah, I think so. We do both. We structure most of our investments at this point as equity. We like to do priced rounds plus token warrants, and those token warrants are typically struck at a predefined ratio. Broadly, not every deal is like that, but we like giving the founder the optionality to do both, right? So I think there are examples where both token and equity accrue value in different circumstances. There's certainly examples where only the equity accrues value or only the token accrues value. But having the optionality to pursue kind of like any of those three paths is pretty powerful, especially in a paradigm where I see more and more talented founders, again, people that might have sold their Web 2 business that never touched the blockchain space, coming into the blockchain space and thinking very seriously about tokens, because tokens allow founders to kind of increase the design space of what their products can do. You own you own an asset because it's deflationary based on a buyback and burn mechanism, but you also are able to stake that asset for certain preferential perks on the venue. That's like, I think, a very powerful and explored but not fully discovered mechanism for user loyalty and distribution. And I think these mechanisms become increasingly more important in a world where like on one hand you've got distribution, on the other hand you've got product, and products in an AI world are very easily reverse engineered and recreated, but distribution and loyalty are scarce and difficult to accrue. And so in a world where this becomes more, where distribution and loyalty becomes more important than the product, I think tokens have a really interesting space that they occupy.
Man, okay. So I want to talk about, what, we'll do a detour quickly. Tokenomics. Tokenomics is such a complicated subject matter, because I'm kind of the opinion that you can have a great product, great team, great market, and if the tokenomics if they suck, then it's kind of, you're in deep trouble. Do you agree? Do you disagree? Like how much should we weight token economics towards the success or failure of a certain crypto ecosystem or crypto product?
I think there are good historical examples for both. I'd say we're still very early in blockchains holistically. So most projects have been forced to kind of like fix the engine while in midair, and I think we'll continue to see that. I know this contradicts the statement that I made earlier, but I think you can have a really powerful product, and if people have a lot of products love, then they'll give you some leeway, on the token initially. But if you're, looking to really scale, I think you need, to have, a solid reason why somebody wants to own your token, and you need those token holders to feel rewarded in many ways. And so I think in the long run, the tokenomics are very important. But if you've got a great product, you get some more grace in figuring that out. And to be sure, nobody's figured it out perfectly. Maybe the Bitcoin network has. But I don't think there are many projects that you would say their tokenomics are 100% right and unquestionable and foolproof.
So you just talked about the design space around tokens and what they're capable of within products and the incentives they can induce. I guess if you had to push, let's pretend a regulation is like totally open and you could design whatever you want. If you had to kind of push the industry towards a certain token mechanism or certain token design, whether it be buyback and burn or something like that, in your opinion, what would be the ideal that people should head towards? Not everyone has to do this, of course, because tokens are different for every product. But in your opinion, what would be the best way to design mass tokenomics for the industry?
Well, I mean, I think we're going to see a world where equity and tokens converge, right? Like there are tokenized equities, whether it's like, whether it comes out of the crypto space or it originally, which I think it will, and I think it already has in many, places, or whether you just see companies, put their equity, on chain, and then, they see that there's, decentralized governance that wants to start to use equity to reward, certain builders or demographics, things like that. And so certainly like the concept of equity, as we know it coming on chain, I think will happen, whether it be, kind of pulled in by the crypto community or pushed in by the, TradFi community, if you will, to use a broad generalization. So I do think we'll get to a place where, the cash flows and the IP of businesses is held by token holders. But I also think there are like global commodity networks that are going to be created where, the value of a token maybe fluctuates based on what the value of, the underlying commodity network provides, is to society, which is super nebulous. But like, helium as an example, at the end state, they're providing, global, internet and 5G connectivity. And if they reach density in all the spots that they need to reach density into, they're going to burn data credits and helium ultimately at the rate that society is demanding data, which I think is, increasing at a rapid clip. But they're also driving the accessibility to that. So maybe they're ultimately decreasing the cost per gigabit. And, I broadly think that, like a fixed token supply and, those types of paradigms is pretty interesting for, rewarding contribution if you notionally price the cost for transacting, so like you don't have to pay one helium for gigabit, you pay 50 cents per gig, right? In the helium example, I think that's really interesting, because then you're rewarding people that hold the network and care about the governance and care about the the long-term holders, and think that this commodity network is valuable, especially as the supply is ultimately decreasing in the end state. But you're setting a floor maybe at the end state for the actual price of that commodity. So I think like those will exist across different types of digital commodities.
I guess this next question is excluding the commodity example, because that the token dynamics are very unique there, but more on like the traditional company example, like Hyperliquid, for example. I guess in a world where tokens are, tokenized equities and the token holders get rights, and then also they get cash flows, the world of crypto is going to shrink dramatically. Well, in terms of like, maybe not the world of crypto, but in terms of the investable assets within crypto will shrink dramatically, because the amount of tokens that actually can implement some sort of like revenue, that actually have revenue, and then will implement some sort of model where they're sending token holders cash flow or buybacks or whatever. So, it will go from, I don't know. We already have too many tokens, but I mean, it'll shrink by like 90%, right? But how do you feel about that?
Great. Yeah, I think it's great. I mean, I think that your company should be providing value to society such that people want to pay for it, whether it's crypto or not. And that is a very exciting future to me. That doesn't preclude, like you can do whatever you want with this technology, right? It doesn't preclude like meme coins from existing. I don't really have a take on meme coins. That's not, my bread and butter. You can launch anything you want on a decentralized blockchain. It doesn't preclude what I think will be a robust, vibrant like digital art sector, and these different types of cultural mediums that are encapsulated on blockchains. But I do think that it will show. I do think that the kind of collapse in the number of tokens, or just the emphasis on utility providing applications, is something that we're investing into. We've always invested into. That's the world that we want to see blockchains in mass used for.
Makes sense. I'm thinking with my clickbait brain now. I'm like, crypto investor says 95% of tokens will disappear, and it's a good thing. I'm like, it's coming up with the title. But
I mean, don't you believe that though? Like, certainly like 99% of blockchain, like whether it's tokens or layer ones, are not used, have gone to zero. I mean, like Coin Market Cap or CoinGecko will show you, like 10,000, but there's like probably another order of magnitude or two that, were launched by some enthusiasts that never got any traction, usage, were never transacted in or priced. And so like, 99.99% of these things are going to zero, if you include that long tail, and that's okay.
Yeah, no, it's what we've said for years, which is that 99% of the tokens out there don't make sense, but there is that percent that does make a ton of sense, and that will revolutionize different industries on multiple levels. So no, I think it is a good thing. I guess my only concern, this is coming from like a selfish standpoint of like wanting to make sure the overall crypto market and companies within crypto are performing well, is that a lot of the, I'm trying not to call it names, but I will just make some fake examples. Anchorage and Coinbase and CoinGecko and, who, like all these, a lot of companies within the ecosystem, they make money from tokens that are launched. And maybe those tokens don't have a explicit purpose, like maybe they're a meme coin, but the creator of that meme coin is still paying CoinGecko or still paying, I don't know, Anchorage or whatever, not actually, but paying these companies. And so my fear is that if you shrink the total market down by 95+%, then it could have massive ramifications for the other players in the ecosystem. Hopefully temporarily, hopefully that'll shift, but that's my concern. But again, to your point, like it is a very good thing. Like the market getting more efficient is what we shall be aiming for. My concern is like the knockdown effect of the broader ecosystem from that process.
Yeah, I mean, I think that's a fair point. I don't know if I am the arbiter of to speculate on whether that's a good or bad thing, but I think to the so a few points. I mean, like Bitcoin and ETH, are still the most widely traded assets, today by a big margin, right? And I think, to the extent that like the money has to come from somewhere, like the money that, a token project pays to get listed, it has to come from somewhere. And, if that project ultimately doesn't return, money to its investors, they've destroyed value, and that spigot will shut off at some point. And I think that's a good thing. I think water finds its level. I think that's the story of entrepreneurship and humanity.
Love it. All right. So going back a little bit, back towards the venture process, could you kind of walk me through an example investment where you go from sourcing, like where are you actually sourcing? Talk a little bit about your DD process. Talk a little bit about the, I guess, monitoring process, post-investment, and then exit, especially on the token side. I think that I don't talk about exit enough on this pod, and I'm trying to bring it up more where, because tokens are such a unique asset where, in theory, you could become liquid after 1 to 4 years. And so you do have to decide whether or not you're going to continue to hold or exit that position.
Yeah, absolutely. So we source from all over the place. It's a combination of inbound and outbound. We publish a lot of research on our research portal. We really try to canvas the landscape for companies that we think are interesting and reach out and get a direct conversation with them. I would say as our portfolio has grown, we see a lot of inbound deal flow come from the founders in our portfolio. So folks that we've supported in the past that have enjoyed working with us and are recommending their friends to us. And so that's probably the main source of inbound deal flow. We also think this space is growing. We have a lot of great relationships with other venture capital firms in the space, and we like to work collaboratively as well. So we get deals from those channels as well. But I think at this point the main kind of inflow is from founders and kind of like our entrepreneur network on the ground. Depending on the shape of the deal, we will prioritize. We have meetings every week, twice weekly, to just prioritize our deal flow and kind of create a hierarchy of the different urgency, and from there, we have our IC meetings every week on Tuesday, and we'll evaluate the merits of different deals. We have a standard memo that we fill out. We do a lot of reference checking. We try to ask questions that get at founder aptitude that aren't easily answerable in projections. I don't really recall one time where projections have been accurate. I think like you either vastly overestimate or underestimate projections. It's really hard to get it spot on. So again, a lot of what we do goes back to the founder integrity, to tenacity, to raw horsepower, and really trying to evaluate that in the context of we agree this is a massive market. We agree that there are inefficiencies, or this is a new market, and we think you can be the one to create that. And so our IC discussions are my favorite meetings of the week, because we get a bunch of different perspectives. The folks are on the table at CMT, Andrew. A lot of spicy takes that I am privileged to ingest and respond to, and ultimately try to make the best decisions that we have. We're not forced investors. We invest in, I think at this point, less than 1% of the companies that we see. And we really ultimately try to answer the question of, like, do we want to do life with this person for, 10 plus years? And if the answer is a resounding yes, then, normally it's a go. On the exit side, I think that the blockchain and digital asset space offers a new liquidity venue in the form of tokens. And, I think there are oftentimes large, potential dislocations between price and traction at the time that a token launches. And I think, like, that's okay, because I think in the venture, the crypto venture category, it differs from, like, what you would consider traditional liquidity event, like an IPO, where, like, a company that is IPOing needs to reach certain, metrics to even be able to IPO. And a lot of times, that's seen, although this is even changing in and of itself with different venture fund structures, like notably Sequoia, where, like an IPO is kind of like the end of a story. I think a lot of times a token network is the beginning of a story. So we want to see, the token start to work, and see if people really like the project, the product, the token, and we, we evaluate that, if we have liquidity, and if we have tokens that are, unlocked, you constantly have a decision of whether to, buy or sell. And that has been a like, I think it's a contentious issue, or like, it's just not, it's an issue that's not very often talked about in the blockchain and digital asset space. I think there's a right way to go about, selling tokens at any time in the lifetime of a project, which is, make sure that you are not at all damaging the project by, selling tokens, and, be on board with the, founders, and, do right by your investors as well. And, if you manage those mandates, I think, there are no issues. So, I guess it's a skill set that I don't think a lot of venture managers, like, coming into the blockchain and digital asset space, like, really carry with them. And maybe it was like an unintended, I think it's, certainly in like 2020, 2021, when these tokens were launching, it's like, what do I do with these? I think as an industry, as an asset class, we're getting a better understanding as the space evolves. But I think every problem, kind of revolves around a communication problem. And so, every problem is ultimately a communication problem. And so, to the extent that you've communicated adequately with the stakeholders, I think you're going to be just fine.
All right. So you've touched upon the founders multiple times, in the sense of, assessing them, their traits, and, their personality. Are they like quote unquote killer? How are you able to determine that? Because, are you just by spending time with them, Are you asking them certain questions that bring up certain answers for you? Are you giving them personality tests? Like, how are you able to determine how motivated and how maniacal this founder is at accomplishing their objectives?
We're trying to actually internally build out a system by which we can like create a score for this automatically. And it's very difficult, and I don't think it'll ever be perfect. It won't ever be perfect. And again, kind of going back to what I said earlier, I think that's why there's so much opportunity in this space, because a lot of it is identifying founder market fit. And I think universal traits that we found in our founder portfolio is like grit and just ambition. Like grit and raw ambition are probably, and then intelligence are like the key traits. Communication is another one that are just like universal. Ambition and passion as well. Like ambition / passion. Those are things that, as a baseline, like you really need to see. I think oftentimes, like everybody's kind of got to find what fills up their cup, so to say, right? And there is a certain type of personality that is just cut out to be an entrepreneur. They don't like balance. They don't need balance. In fact, balance does not fill up their cup. Maybe it drains their cup because they have a feeling that they should be building, right? And that is like the hallmark of a great entrepreneur, or at least many great entrepreneurs. And so I think there's like a certain personality type that tends towards what Elon Musk famously called chewing glass and staring into the abyss. And then from there it's like, well, do they have the requisite skill set to really be dangerous in the market that they're going after? And that is, again, a subjective analysis that we spend a lot of time trying to suss out through reference checks, through multiple conversations, through iterating on the kind of product and go-to-market strategy, and just kind of checking those instincts. So it's very conversational, very subjective.
All right, so you've been around for a very long time within the space. So is CMT Digital. Can you talk about a crucible moment that you've been involved with? So some challenging situation or moments, and there's multiple bear markets, there's multiple calamities that's happened. So I'm sure you have some stories to chat about.
Yeah. Well, I mean, it's been interesting to see this industry evolve. And I think the existential fears of like, will Bitcoin be around? I think there's a recency bias towards everything. But if I try to sit back and look at it as objectively as I can, when I joined CMT, I didn't know if Bitcoin would be around, right? Like we had the block size wars, we had we had the DAO hack, we had
Bitcoin Cash was a crazy, like I didn't know if Bitcoin Cash was going to be the new Bitcoin. Like it was a crazy period.
Right, exactly. We had China ban Bitcoin mining, more than half of the hash rate, relocated. So there are tons of like existential, what I would have called existential fears in, 2017, 18, 19, that, now in hindsight, with the benefit of hindsight, look kind of like silly to me. But in the time, it was like very, raw and emotional for me. And I think I've, been able to kind of regulate better and learn to regulate better. If I had to point to one specific moment, it was the collapse of FTX. I was in our London office. I remember just viscerally, I had the benefit of like kind of being up before people in the US. But it was just a really shocking event because it unfolded so fast, with the tweets from CZ that they were selling all of their FTT and then just the rapid unwinding. And I remember grouping up with our team and discussing the path forward. And it was very rational and calculated. We reached out to every one of our portfolio companies, had conversations with every one of our portfolio companies, talked through, of course, any sort of exposure, which, thankfully there was very little direct exposure. And then, talked through kind of next steps. So I'll never forget, like I remember exactly where I was sitting and all the, emotions, like when I called to memory that experience. That was just crazy. But I think the story of Bitcoin and the story of the blockchain and digital asset space is, it's continued to meet the challenge of, whether it's endogenous or exogenous, attacks. This space has continued to endure. And to me, that kind of like Lindy effect only strengthens the investment case for this asset class as a whole.
That's great. Yeah, no, FTX was I think that's a recurring theme. That was the big one for most people, because I think it was just so unexpected. I don't think anyone, well, obviously no one knew, but it was just, that was, I don't know, macro factors. You can see, there's a recession and this is happening. Having FTX just be kind of a scam, essentially, that was just, that was surprising to everyone. All right, so I want to talk about kind of the operational aspect. I know you guys run a very tight ship over there, but if you could wave a magic wand and fix one aspect of fund administration, of tax, of audit, of custody, of wallet management, any sort of operational aspect of CMT, what would that magic wand fix? And like, what would be the ideal scenario for that function?
Yeah, I mean, I think auditing is going to become a lot easier in a world where things are on chain.
Well, so you would think that, it's all on chain. Audit's so easy. It's absolutely not, which is so confusing. But hopefully one day.
Yeah, I mean, I think so. We're audited by Deloitte. They're fantastic. I think there's certain technologies. So I think broadly for this industry, like you can't retrofit old technology to accommodate whether it's KYC, AML, or the travel rule, or auditing, or OFAC and OFAC compliance, things like that, which are all extremely important. I think you need. I think it's very difficult to like reinvent old technology to solve these problems that this technology kind of presents. I think you need like crypto native solutions that are built with crypto first like principles to solve these challenges. So we see it as a large investable opportunity, because clearly this technology is not going away, and so and these are still problems that need to be solved. So it's just kind of like when will you see some of the fund admins like using and adopting the crypto native solutions, or a crypto native fund admin really kind of like coming about. I mean, we love our fund admin. We have a almost 8-year relationship with them. but I think those are kind of the chasms that need to be crossed, broadly. I know that's not a super specific answer.
No, that makes sense. I'm going to need an intro to your front end man at some point. No, I'm kidding. Cool. All right, Sam. Well, all right. 10 years from now, you're back in the pod. Where is CMT?
Yeah, absolutely. I mean, I think we're still an early stage investor. I think that blockchain technology is, going to be thought of like the internet. Like, it kind of just works, and you may not even know that you're using it. And so we're going to be investing in the fringe ideas that are certainly, I think 10 years from now, it's going to be, AI kind of enabled blockchain type opportunities. We're going to be, same people, I think, around the table. These are all people that I want to spend, my career with, talking about new and exciting opportunities. I think our decision making, or at least due diligence process, even now is highly augmented by AI. I think we're going to be at a place. I mean, in 10 years, if you believe that the pace of AI development, at least right now, is 2 times Moore's law without showing any declines to scale. Like, we're going to be in a really, really interesting place. And I think as a firm, just like we're doing right now, we're going to be tapping the benefits of the newest technology to help improve our processes and maintain our competitive edge. So that's where we'll be here in Chicago. Right down the street from you.
I love it. All right, so you did speak about you mentioned something around the distribution earlier, distribution and product. One of the fears that I have is that distribution is so powerful, and I'm scared that the incumbents are going to win crypto. I'm scared that JP Morgan and Venmo are going to end up dominating crypto because they'll integrate all the best applications and protocols and whatever into their distribution hubs. Is that how do you feel about that? Would you even mind if the big guys, the big TradFi guys and fintech players end up quote unquote winning crypto?
I think like the law of, I don't know if I can call it a law, but like the Clay Christensen paper about disruptive innovation, the law of disruptive innovation, that it's the companies that emerge natively with the technology, like build with the technology first and don't try to retrofit, are the winners for each generation. I think with money it's more difficult, but even now the new generation is storing their wealth on Robinhood, on Coinbase, and so over a long time span, which is the luxury that we have to invest out of our venture capital funds, I think you can see these demographic shifts. And so I do think that the crypto native companies will be the winners over a long time horizon. Now, that's not like a black and white answer. There will be some industries that will adopt, and kind of the incumbents will remain in control. But I think by and large, I don't think I'd be in the blockchain and digital assets venture capital space if I didn't believe in the theory of disruptive innovation.
All right, Sam, it is time for the closing questions.
All right, hit me.
Alrighty, what trend is totally overhyped and what trend is totally underhyped?
So I know we talked a lot about bringing equity on chain. I think that's going to be a byproduct of bringing like dollars on chain. So I think bringing dollars on chain, even though like stable coins might be the most popular narrative, maybe at this point in time, I still think the effects of that are like underestimated. And then on the flip side, I think the effects of the I think the tokenization of equity is from an investable category standpoint, just not all that exciting to me, because I think it's going to be a byproduct of our financial system, transitioning over to this technology. So, very excited stablecoins, less excited about the tokenization of equity per se. Now, that's not to say that I'm not excited about, the financial primitives that will be built when, equities come on chain. I'm talking purely about equity moving from, a stock certificate to a blockchain based system. I think that's not a super monetizable opportunity, kind of in and of itself. And then what is underhyped? I mean, I continue to believe that there's a lot of asymmetry in just the long tail use cases for this technology, the stuff that's necessarily kind of underappreciated or just not talked about. I think we've scratched maybe 1% of the surface area of kind of industries and that blockchain technology will really upend. And so I wake up excited every day to hear really qualified. I mean, I'm so lucky I get to hear qualified entrepreneurs talk to me about wild seemingly outlandish ideas in new spaces, and that's not slowing down at all. Even though crypto markets year to date are down. So I think that's just a great benefit that I get to enjoy, and something that I think the consensus is kind of just so wrong that we squeezed all the juice out of this lemon.
Love that. All right, looking back at your time in the space, what is the biggest thing that you've changed your mind about?
I think it's just this feeling that investing in people and people that you want to do life with for an 8, now that I've been in this space for 8 years, it's I understand what it is to have an 8-year relationship with a portfolio company. And to me, having the look back period, you kind of understand that going forward, you want to invest, you're really investing in people at the end of the day. And you want to invest in the people that you want to do, life with for a long time. And
so, that realization, you've changed I guess initially your thought process was more so about the quantitative factors, hey, the market and the data. Okay. And now it's more qualitative. Very cool.
I mean, I think the quantitative piece, if you can get, 1% of a $1 trillion market, market sizing is extremely important. And, analyzing, your competitors and your competitors' take rates, things like that is extremely, extremely important. So I don't want to downplay that. But in terms of hierarchy of importance, the founder is, occupies the top spot, top of the pyramid.
All right. What is your most contrarian opinion about crypto? And, it could be some current thing, or it could be something you've thought about for a long time, but what is your most contrarian opinion within the crypto space?
I mean, I think the equities on chain as a monetizable opportunity would probably make a lot of people not very happy. I mean, I think I think we're still underestimating what regulatory clarity will do for this asset class. I still think that's not broadly baked into the social consensus. I think blockchains as truth machines is a blockchain's most important purpose. So in a world where information is and contradicting information oftentimes is assaulting you from all different types of angles. To know with certainty that, like a Bitcoin block is produced and these are the transactions, but also like that, a certain event happened at a certain time as recorded on chain, bringing, quote unquote, real world events on chain, kind of honing in the non-deterministic nature of large language models, and being able to, triangulate, kind of what is truth, either based on crypto economic incentives or just looking on the chain in and of itself. Like, I think that's the most important thing that blockchains provide. It's hard to like quantify that without a specific use case, which we could go into if you want. But I think, that is like fundamentally a global, societal issue that we're confronting, and blockchains are a fantastic solution to that.
Making trust, make trust great again. There we go.
Make trust great again. That's it. All right, we solved it. All
right. Well, what's a piece of content, whether it be a podcast, blog, book, etc., that had a very major impact on you and how you view things in life?
Well, I mean, the Bible for me is foundationally important. In terms of venture specifically, like I read 0 to 1 every year at least once. I think there are very few original thinkers in the world, and if you can kind of glob on to those types of people, you can train that muscle. I think those the ideas in 0 to 1 are extremely, liberating and train you to think in unconventional ways, which is where you ultimately, I think, find value. Like the next whatever, you hear it all the time, like the next Apple is not going to look like Apple, right? And so if you're looking for the next Apple, well, you have to be thinking non-traditionally. And so anything that kind of like reinforces that is something that I tend to gravitate to.
Love that. All right, last one. How do you define success, and do you feel like you've achieved it?
So how do I define success? I think I heard it best. Like the meaning of life is doing something larger than yourself with a group of people that you love. So I guess like in that hierarchy, it's like finding, like a mission that you want to devote a lot of your energy and time towards, and then surrounding yourself with people that kind of push you to be better. So in that in that domain, I think I'm very fulfilled by my work and what I get to do every day. I love the people that I work with. I think from a family and from a faith perspective as well, very much so. So I'd say I've been very fortunate to be successful.
Amazing. Sam, thank you so much for joining me. This is an awesome conversation. If people want to learn more about CMT, learn more about yourself, where should they go?
So you can go to CMT Digital, cmt.digital. You can also follow us on Twitter at CMT Digital as well. We post content every week. There's something new from us. It's it can be kind of like macro thoughts or really deep in the weeds research on one of our portfolio companies. But we're a fun follow. And if you want to reach out to me, I am S Hallene, Hallene at cmt.digital or CMT_Sam_I_am on Telegram.
Amazing. Sam, thank you so much.
Yeah, thanks so much for having me, Andrew.